Last week we talked about your trading journal. That journal is only good if you actually use it to analyze your trading. That's what we're going to talk about today. Don't go away. Hi, this is Tim from TradingStrategyGuides.com. Welcome back to our channel. You may remember from last week's video that trading is about probabilities and statistics. We develop strategies, test strategies, record the results, review our performance, and improve our strategy based on the results of our review. Last week we talked about the trading journal where we can record our results, and over the next couple of Wednesdays we'll talk about how to use that journal to review and optimize our performance. Today's video will be short and we'll set up the scenario to continue the discussion next week. Pretty much every trader wants to improve his trading strategy so that you can ultimately make more money. In order to get to the point where you can improve your trading, you first need to go through the preparations to create your strategy so that you can later be able to review your trading rules and trades. However, in order to be able to review your strategy, you also need to have a logical system, or you won't be able to properly review what you're doing or put any trust in your system. It's been said that if you can't sum up your trading strategy in a few sentences, the chances are that your strategy is not logical. So you need to be able to break down whatever you're doing into its fundamental parts. This, in essence, is completely logical, and you'll be able to review it. That will allow you to not only optimize your strategy, but also improve as a trader. So, in order to optimize our trading system, break it down into the standalone parts, starting from your entry and exit techniques, and move on to your trade and money management. Let's first start by defining our system goals and identify what we are trying to achieve with our trading strategy. Are we looking for reversals, breakouts, or trend continuation setups? Under what trading environment are we looking for them? Reversals on the daily chart or intraday breakouts? The key to a good system objective is that it has to be logical, succinct, and not contradictory in any way. If you overcomplicate it, it will be harder in the heat of the trading battle to concentrate and focus on your strategy. Let's assume we trade based on a trend-following strategy that uses the daily time frame to determine the overall direction of the market. The goal is to get into a trade on a retest of a broken support or resistance level. We're also going to identify the hourly chart as the time frame used to time the market. To start with, we need to have some monetary goals in place, so when we review our trading performance, we can discern if our strategy is aligned with our goals. For example, we can set the following monetary goals: a positive reward to risk ratio of at least 2 to 1. We make sure our winners are bigger than our losing trades. The strategy has at least a 50% win rate. Because we have a 2 to 1 reward to risk ratio, a 50% winning rate is enough to still come out positive. And we want to make at least 10% each month. For the purpose of this and the next video, we're going to outline a very basic trend following strategy that uses the following rules. We'll use a daily swing high-low price structure to determine the trend. We will trade only in the direction of that trend. We will then drill down to the 1 hour time frame. If we're in an uptrend, we'll wait for a broken resistance to be retested. And if we're in a downtrend, we'll wait for a broken support to be retested. And we'll use the stochastic indicator for overbought, oversold confluence when we retest the broken resistance and support. The entry trigger will be based on a 2 candlestick reaction from the support or resistance level, and our stop loss will be 30 pips below the support level, and the take profit will be 60 pips above the entry level. In other words, a 2 to 1 reward to risk ratio. This is what you'll be looking for the daily chart on the left and the hourly chart on the right. Now, this is an example of a trading strategy we'll use in next week's video to go through the review and optimization process. The review and optimization process is something you'll want to do regularly, so you will be able to react to changes in the market and modify your strategy to increase your profitability. And that'll wrap up today's video. Come back next Wednesday at 3 p.m. New York time, and we'll do the second half of this video. Come back on Monday and Friday at 3 p.m. also, barring unforeseen circumstance, for my other videos. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. If this video helped you, smash that like below. Subscribe and hit the bell if you want to be notified of our videos in the future. Have a great Wednesday, and we'll see you on Friday.